Good morning, all. This is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Tuesday, the 12th of May. My disclaimer: I do this for educational purposes only. I'm here to share my tactical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. And I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at ES today. We've got ES. We've still got a 60-minute sell signal. That's still not reached the possible near miss target. We are testing the rising support from the low. I'm currently on ES, and if we break through it, I'm thinking we may make that sell signal today. Now, one thing to show about the market here is that a couple of weeks ago, 2 or 3 weeks ago, I was saying that I was expecting this to go higher. I was looking at some targets. We'll be looking at those targets again today, and I am thinking that there is a case to go higher from here, but we don't need to. And there are a couple of I've been explaining that I was expecting a hammer to fall in terms of the in terms of oil prices and expectations for the rest of the year. And I think we are starting to see that hammer fall, but I'm still thinking in terms of high retest, topping process, and so on. But one of the things I am noting about today is that stocks are down and oil prices are up. 4% or so. This is a theme which is going to develop and get a lot bigger in my view, and that may be starting now. So we will see, but I am thinking we could fail any time here. I'm still looking for topping patterns and so on, but obviously there's a chance that things may start escalating suddenly and just start heading down on equities and heading up on oil at a hell of a pace. All right, looking at NQ. NQ, 60-minute sell signal is fixed. Not quite reached the possible near miss target, but it's in that kind of area. I haven't marked it up yet, but I'm wondering about it. RTY, no divergence, has not retested the high yet. YM, obviously, we had both the flags on RTY and YM play out, make their targets at basically the top of the flags, which is obviously which is always the target on a flag. So the bottom of a bear flag, the top of a bull flag, and we haven't quite reached the retest of the all-time high on Dire, and we may not on YM and Dire, and we may not, but I'd still like to see that made. DAX, we made the bull flag target there too, retested this high, hasn't made it back to the all-time high and may not. ESTX, bull flag made target there too, and Nikkei is I'm not really seeing any obvious place for this to fail, but we do already have a daily RSI 5 sell signal fixed, and we've got a 60-minute sell signal fixed as well. Watching the rising support to see if that fails. All right, let's have a look at the bigger picture charts. Okay, looking at let's just have a look at the bigger picture charts that have developed from the ones I was doing a couple of weeks ago. Now, this is the trend line I was looking at on SPX that needs to be hit, and as you can see, it's been hit. Could we go a little higher? Yes. But this is actually a different wedge from that low, and you can see we hit that too. We have slightly overthrown it. Could we go a bit higher? Yes. Could it fall right here? Yes. Looking at Qs, I actually had a couple of trend lines there, and I've added a third shorter term one. But basically, we're coming up to the test of the larger one here. And we're really very, very close to testing that already. I am thinking if it goes beyond that, I've got the shorter-term trend line that might deliver, which is a pretty peachy looking trend line, and you can see that here, and it's a really, really nice trend line. Doesn't mean it's necessarily going to be hit. We've got quite a lot of negative divergence on the daily charts, on Qs and SPX particularly, and we have every reason to think that there might be issues coming soon. In terms of Dire, I was looking for a retest of this high here at 503.37. I would love to see that hit. I'm thinking it should still get hit, but I'm just aware that every day we don't hit it, the clock is ticking. We're going to be in all probability topping out here soon. I've got an oil post. Sorry, I was distracted by various things yesterday, but I'll have an oil post I'll have out today talking about the case for basically a big blow up on oil. And it's not certain. Nothing in the market is ever certain. I was looking at a report which I was finding fairly astonishing yesterday from Goldman Sachs, arguing that oil prices may have peaked from this crisis and might just head down 10% over the rest of the day, over the year. I'm very skeptical about that. That would make this unlike any oil supply crisis we've ever seen, and there's no reason for it. I mean, in 5-10 years, someone actually asked me a few weeks ago what would happen if the Strait of Hormuz was blockaded in 20 years, and I said I wasn't sure anyone would care. And that's because fossil fuels are on the way down. Oil, despite Trump doing everything he can to maintain the fossil fuel age, it's economics is killing it. It's cheaper to make power with wind and solar, considerably cheaper. And also, you don't have to worry about the Strait of Hormuz being closed. The sunlight doesn't go through the Strait of Hormuz, neither does the wind. So we're seeing I think one thing that we're going to see as a result of this crisis is a big acceleration of the move towards renewable sources of energy. But the fact is they were already cheaper. And that was already making the transition pretty fast. Last year, energy use rises every year, and that's because energy use is strongly correlated with economic activity. But for the first year ever, last year, there was more renewable capacity added than there was an increase in energy use in the world. That will accelerate, and fossil fuel demand will start to decline, and that's just night following day. That is just the way economics works. So the whole Strait of Hormuz issue is an issue which could easily have been avoided just by delaying it. But of course, the very last administration who would see that is the American administration, which of course has adopted climate change as a big cultural war issue and hates renewable energy, however cheap it is. All right, so looking at IWM, I drew in a trend line there, and we're at the first one already. And actually, that's the best trend line. So we could well fail here. Do we have any meaningful negative divergence? On the RSI 14 chart, we could get it with another retest of the high on the IWM daily chart. In terms of Dia, we've got no meaningful divergence, but 3 out of 4 is enough. And I'm thinking if we go a little higher, retest the all-time high, then that could set something up on either the RSI 14 or the RSI 5. But to be honest, neither of those is looking particularly promising for delivering a signal this time. But it doesn't really matter because we don't need it to be a unanimous decision. All right, let's have a look at the smaller, slightly smaller picture. In terms of the SPX ADP chart, that's not really showing anything. Monthly chart. Here we've got negative divergence. If we didn't already have a monthly RSI 14 sell signal fixed, then we would have another one brewing. Do I really pay much attention to those? No, I'm more interested in the RSI 5 sell signals, and we don't have one of those. On the weekly chart, no current divergence. On the 45, this is something to show, and I follow this chart and I publish it every weekend. This is the SPX versus the 45 DMA. This is a big high. Last weekend, the high was at 7.83% over the 45 DMA, and this is a crazy town level. So we've got 3 readings I found, which were higher than that, mostly just after the 2020 low. We've got one here, which was at 8.7. We've got one here at 8.4. Both of these at the fairly early stage of the move. And we've got another one, which was on a particularly sharp rally, which was here at 9.57. But this is a rare reading. We are a long, long way above the 45 DMA, and generally speaking, we'd be looking at reversion to the mean starting pretty damn soon. In terms of EFs, we've still got an RSI 5 sell signal fix. If we didn't already have one, we'd have another weak one brewing. We've got nothing on the RSI 14, but to get that, we would need to see a pullback and then a retest, and that's the way these things would often end. In terms of the daily chart, we've done 4 days of a daily upper band ride, and that ends when it ends, but we are very, very, very stretched. In terms of the hourly chart, RSI 14 sell signal brewing, and we could see that fixed today. Not a lot to see on the 15-minute chart, But obviously, this is the rising support trend line I'm watching, and that is the one that's currently being tested on EFs. All right, looking at the Qs, we're also on a daily upper band ride. On the daily chart, we've still got an weak RSI5 sell signal fixed and a full size one brewing, but we're getting pretty close to losing that divergence at the moment. On the hourly chart, we've still got an possible RSI14 sell signal brewing, watching the rising support again, but obviously this has been almost vertical, although not as vertical as the semiconductor sector, which is really just blowing it out of the water at the moment. We've got an RSI14 sell signal fixed here. We have got some smaller sell signals here, nothing definitive, and to be honest, I only started really getting excited when I see some smaller, shorter term topping levels forming, and we haven't seen that yet. All right, looking at Dia. Dia, we've been going pretty slowly, and this is why we haven't made a new all-time high yet. I would like to see that new all-time high retested. Does it have to happen? No. Do we have a topping pattern here short term? Yes, pretty decent looking double top. And we don't have to go any higher, but I'm thinking we probably will. All right, looking at IWM. We've got possible RSI5 sell signal brewing on the monthly, on the weekly chart, no current divergence. On the daily chart, we've got a possible RSI14 sell signal brewing. I'm looking at, that daily chart. It's not as easy to see that trend line here, but that daily chart I showed you where it was hitting a trend line already needs to be taken seriously. I'd quite like, I've got a couple of alternate trend lines above, but those don't need to be reached. On the hourly chart, no divergence. 15-minute chart, we had a little, nope, no divergence. The high yesterday just missed the retest. All right, DAX, no current divergence, and I'm wondering about a retest of this high just to finish off the move. Not necessarily going to get that. Nikkei, we've already got an RSI5 sell signal fixed, and we are pretty damn close. No, we've actually hit the obvious resistance trend line here. And that's the obvious one because it comes from here, which isn't a great anchor, but is an okay one. But it goes through this high, it goes through this high, and it touches again at this high. This is a 4-touch trend line, and it's nice. We could see an overthrow of it, but we will see. But are we at a level where we could plausibly fail across the board? Yes. And I'm watching oil prices. When we start seeing those going up, whatever is said by the administration, then really the clock is going to be ticking very, very loudly. All right. One thing, I had a request yesterday to have a look at some tickers. They were SMH, SOX, MU, and SNDK. And actually, I haven't done much with those. And the reason is I can't. The moves are too wild. This is a log chart. Yeah. And I'm not really getting any usable trend lines. We're not forming obvious patterns here. It might be I'll be able to find something afterwards, but beforehand, no. What I would say is that we've got daily sell signals forming on SMH, and they're nice, and we've not seen a wild move on the scale for a long time. I'm not sure we haven't seen one really since the dot-com crisis, and actually I'm not sure that was as strong as this one. But this is, I looked at something yesterday and saw that one of the key measures of the distance, I think this was 10.8, for the first time it reached 10 ATRs above, a key level. But I mean, this is a wild move, but it's kind of like the one we were seeing at the end of the tech boom, just before the high in 2000. So this is a wild move. In terms of SMH, again, a wild move. Sorry, SOX, again, a wild move. Not quite as drastic, but, although this chart doesn't go as far back. But, again, we've gone beyond the stage where really patterns would mean anything. Again, we've got daily negative divergence, and it's nice. And we've got a moonshot, which could end at any time. In terms of MU, which is Micron, we've got monthly negative divergence, but again, we've just seen this AI thing, the swamping of the demand for semiconductors, memory, processors, and so on and so forth is just taking this out of any reasonable TA basis. We've got some weekly negative divergence. We've got some daily little bit of negative divergence, but basically we've just got a big spike heading towards the stratosphere. And this is actually just from the end of March low. It's gone from 311 to 823. Wow, that is amazing. And it's beyond anything that will reasonably be covered by patterns. In terms of SNDK, which is SanDisk, of course, again, I mean, these companies, the demand and the prices are so wild that they're just abandoning their consumer businesses altogether. A couple of them, I think, Crucial, have basically just shut down while they're just servicing the AI industry. But having said that, they're not building a lot of extra capacity for this. They're not thinking this is long-term demand. They're thinking this is short-term demand. That is an awareness that this is a bubble. Or might well be a bubble. So, but I mean, look at this on SNDK. Damn, this is a long chart. This is going from 27 to 1600. This is just, beyond wild. I think this is actually so wild we don't even have any, well, a tiny bit of negative divergence on the daily, but it's not a lot. But wow. This is just absolutely wild. And actually, since the last low, which was in March, at the end of March, at 558, this has tripled, basically, slightly less than tripled. So, we're not really looking at patterns at this stage. So anyway, wanted to talk about those, but at the moment, conventional TA doesn't really do anything with things which are basically on a spike higher. All right, let's have a look at the others. Let's have a look at DX, where we are still kicking around, waiting for some real action in the oil space, I think, which I'm thinking I would like to see another big spike down on stupid or fake good news before oil really takes off properly, which I'm thinking it likely will. We will see whether we get that. I'm concerned we might be starting the main move up, or at least we may have started that main move up already. In terms of USD, just kicking around. GBP USD, just kicking around, no obvious patterns here. USD JPY, we had the double bottom break up and fail. This has set up a larger, but still very much a valid double bottom here. We're testing the monthly pivot. If we can get over that and break up from the double bottom, we could see a spike up to the high. But of course, what happened here when we got up to near my desired retest level of 162 is we saw a government intervention to take it down to 155. We could see that again. Not really seeing an awful lot on USD CAD. Might be possible bottoming action. Australian dollar, NZ, not really telling us a lot. It's all about DX, and here we're waiting for the main crisis to start, and when that starts, we're waiting to see whether the correlation which has oil going up with the dollar still holds. In terms of ZB, overall situation looks very bearish. Situation set up, well, the question is when. Likely bearish consolidation of some kind, maybe a triangle, might see a bit higher and see some kind of a flag. We will see. ZN, the same. Coil, we've got a little bottom that's broken up here, but I haven't marked it in. But this could potentially take us back up to the highs. That's a concern. I was hoping for more misplaced optimism before this main move started. We might not get it. In terms of CL, maybe heading back towards the highs. HO, maybe heading back towards the highs. Actually pretty close to the highs. And RBOB is very, very close to a new high. So we shall see. All right, looking at NG, we've got an IHS which is broken up with a target in the 317 area. I would love to see this make a target. I'm wondering if it will. We're seeing a bit of a pullback here, which we often see after a move up like this and a break up like this. And if we see a move down below 2.67, then this IHS will fail and probably just reject the lows. I'm suspecting the lows are going to be retested before or after, well, whether or not we go up and make this target here in the 3.17 area. Looking at GC, GC is lost in space. We are again waiting for the move on oil and waiting to see what the correlation with the move on oil will be when it gets there. SI, nice higher high. Could this be a larger bear flag? Yes, it could. Looking at the bigger picture, I'm not going to look at that chart today, but it is very much a potential there. Is this potentially that flag right there? Yes. So we will see how that goes. All right, hang on, just color that the right color. So I am wondering. Overall, I'm bullish on precious metals, but I'm a bit concerned about the relation they were having to the oil spike last time, because I'm expecting that oil spike to get a lot bigger soon. And I am wondering whether we may see some more downside before we see that go up. I suspect a lot. In terms of palladium, still looks like a bear flag setup. Platinum still looks like a bear flag setup. Is this a double top? Bit big for it, I think. HG has gone higher. I was wondering about a retest of the all-time high there, set up a nice looking double top. Have we reached that yet? No, and that's one reason I'm thinking that equities haven't quite topped out, but I'm thinking they're probably going to top out over the next week or two. So I'm not expecting this to last an awful lot longer. In terms of KC, KC has now come back, retested the low. We've got a 60-minute buy signal fixed, and we have a potential overall double bottom here. Watching to see how that develops. SB, we had a head and shoulders breakdown here, and that failed. Obvious next target is a retest of this high here, just under 15.5. CC, we made the flag target that I'd marked in. No current divergence on CT. Is going higher, and I'm expecting it to go a lot higher, along with wheat and corn and soy. Lumber, still wondering whether to resume the downtrend. Wheat, I think we're heading back to the prior high, and then my suspicion is we'll go higher. We do have a possible 60-minute sell signal brewing. In terms of corn, the weak 60-minute sell signal hasn't quite failed, but I don't think it's quite failed, but it's failing. I think this is going to resume the uptrend here. This hasn't broken up from a double bottom yet. And soy, we've got a likely IHS forming, but obviously until it gets up over this 1250 area, it's not going to be breaking up for that IHS. I'm expecting them both to break up, and I'm thinking all of these may well make their targets. On ZL, pretty close to the highs. Live cattle, this looks like a bull flag setting up a retest of the high. Lean hogs, I would love to see this head back to the highs, but I have to say, as a bear flag, I think this is now too large to be credible. So I'm going to be having a look at the daily chart on the weekend and seeing what I can get out of this. All right, we shall see. In that case, we've got no questions. I think that's a wrap. Everyone take care, and I'll catch you guys tomorrow. All right, cheers.